There's a lot of confusion around the idea of investing, partially because of people trying to sell products on the internet saying that investing is a way that you can get rich quick. That's not how it works. Investing is a way that you take the money that you have, you put it into this thing, that way this thing can start earning you a little bit of money. The more money you have, the more returns that your investments are going to make you. Your investments are not going to make you rich, but your investments can make you wealthy. And the difference between rich and wealthy is rich is the ability to go out and buy whatever you want. Wealthy is the ability to have the freedom in time. So if I can get a 10% return on my money, which is a pretty good return, if I can get a 10% return on my money and invest $1,000, that means I'm going to make $100 over a year. If I invest $10,000, that means I'm going to make $1,000 in a year. If I invest $1 million, I'm going to make $100,000. Now that's a lot of money. $100,000 is a lot of money. But in order to get that $100,000, I have to accumulate that $1 million in the first place. This is where a lot of people get kind of swayed away from the idea of investing, because you always feel like, oh man, I'm going up this hill. Before I make any real return, I'm going to have to invest so much money, and there's no point for me to start now. But the reality is, slow, steady investments compound and can grow over time. If you started investing $100 a month when you were 21 years old, and you continue to do that until you retired, and you can get an average 10% return, which has historically been the average stock market return, you would retire a millionaire with over $1 million. And that's with the $100 a month investment. Now, when most people hear this, they say something like, but Jaspreet, $1 million 30 years from now is not going to be that much money, especially considering what's going on with inflation. I mean, $1 million 20 years ago in the 1990s might have been a lot of money, but now, after the 2020 pandemic, $1 million isn't going to be enough. And when I'm 65, it's nowhere going to be enough. But what you're missing is, this is assuming you're only investing $100 a month. If you work to earn more money and you get a raise every year, you also need to raise how much money you're investing. Which means now, as you increase your income, you also need to increase your investment. In fact, if you really want to become wealthy, the hack, quote unquote hack, to become wealthy sooner, is next time you get a pay raise, increase your investments before you increase your lifestyle. If you do that, now you have more money being deployed to build you that wealth, and you can get that wealth sooner rather than later. And now it's not just going to be the $1 million, it can be $2, $3, $4, $5, $10 million, depending on how aggressively that you can invest your money. But the key here now is you got to put your money to work. Now, where do you invest your money? You can put your money into the stock market. And this doesn't mean you have to go out and try to find the next Google or the next Amazon. There are ETFs or index funds. These are groups of companies. These are just funds that you can buy into that will give you exposure to the total stock market. There are funds that you can invest in that will give you exposure to the S&P 500, the group, the 500 largest companies in the stock market. There are ETFs that will give you exposure to the Dow Jones. There are ETFs that will give you exposure to the NASDAQ. There are ETFs that will give you exposure just to dividend-paying companies. There are ETFs that will give you exposure to real estate. There are ETFs that will give you exposure to emerging markets, countries and companies overseas. And so now the game isn't you trying to find the best company, because let me tell you something. If you want to invest in individual companies, you have to be willing to put in the work, to do the research, to keep up with companies, to listen to the earnings calls, to study the financials. And I think most people, when they get into investing, what happens is you fall in love with the idea of being an investor and putting your money into something and seeing a huge return. And I fell into that same trap as well. And so now you start looking at, what you have, and you say, oh, I have Apple products, I have Lululemon products, I eat at Chipotle. Let me start putting my money into these things. And maybe some of them will make you money, but some of them might not. I was at a conference and the host on stage asked me, why can't somebody just invest in blue chip companies as opposed to investing in a fund? Because a blue chip company is a large company. They own a big share of the economy here in the United States. So why don't you just invest in individual blue chip companies, because those can get you huge returns? And you're right, they can, but they can also fail. Do you want to know another blue chip company that was one of the largest companies here in the United States? Sears. Sears was one of the largest companies in the United States. They were the disruptor in the United States. They had changed the game of retail in the United States, and today they are bankrupt. Why? Because every company, every country, and every currency has a lifespan. And when you're investing in individual companies, well, guess what? Technology has changed and shortened the lifespan as well. Even Jeff Bezos has talked about how Amazon will eventually fail. When? Nobody knows, but eventually Amazon will fail. Every company will fail. artificial intelligence has changed the game again for businesses. What does that mean? The lifespan of companies that are not able to innovate, that are not able to keep up, that are not able to change with the times are going to see a shorter lifespan. So now your job as an investor is to buy into companies and find the companies that are keeping up and innovating and growing the products and growing the revenue and keeping that consumer interest. And maybe you'll get lucky and find a company that is, but maybe you don't. And this is where the real skill of an investor who is investing in individual companies is because now you're investing in researching the company, keeping up with the company, and doing all of that work. If you enjoyed this short clip from my longer videos, here's another clip that I think you'll love. And while you're at it, if you're interested in learning more about how to start generating passive income, our team put together an amazing guide on how to start generating passive income for free. All you gotta do is click that button right over there. Thank you for watching, and as always, keep hustling.